Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the best value stocks, the fastest growing stocks, and the stocks that have the most momentum behind them. So this is going to be a fantastic video to watch regardless about which of these strategies you actually implement for your personal portfolio. For more videos like this one, remember to go and smash that like button right now, comment your favorite stocks on this list down below, subscribe if you are new, and without further ado, let's just jump right into today's stories. So the first strategy we're going to look at is value investing. And if you didn't know, value investing is an investing strategy where an investor is going to be picking stocks in which their current stock price is actually trading lower than the intrinsic value or the fair value of that company should actually be trading at. And normally, value investors will look to a particular ratio called the price to earnings ratio to determine if this company is undervalued or not. So we're going to be looking at a couple companies where these stocks are actually trading at the lowest PE ratio over the last trailing 12 months. So ideally, we would want the price to earnings ratio or the PE ratio to be very low, because this means that the current stock price is trading either below or close to their earnings, because this means that their current stock price is lower than what it should be trading at right now, especially if you plan to hold these companies for the long term. The first company that we have on this list for the best value stocks is going to be United States Steel Corp, ticker symbol X. Right now, the current stock price trades for around $19.84 per share, while investors think that this company is worth somewhere between $20 and $44 per share. The United States Steel Corporation Company clearly makes steel products, and these steel products are used by automakers to make lightweight vehicles. This steel is also used in construction products, various appliances, and containers throughout the United States and Europe. So I can't go into detail too much into each one of these companies. However, I do just want to highlight the current stock price, what investors think that the price should be worth, their PE ratio, which makes them a good value play, and a slight summary of what the company does. Also, when you see H or B next to a company, H stands for hold and B stands for buy, and that is just my personal opinion on that particular company. However, according to this Investopedia article, all of these are pretty good buying opportunities. However, for me, I wanted to be even more specific. The next company we're going to talk about is NRG Energy Inc., ticker symbol NRG, which currently trades at a stock price of $38.32. However, investors think that the company is worth somewhere around $42 to $52 in the next 12 months. The PE ratio is higher than the last company we looked at because it's coming in at 2.3. However, this is still a relatively low PE ratio, which makes it a good value play. This company in particular is most known for selling power, natural gas, and services to commercial customers, residential customers, and even industrial customers throughout the United States and Canada. And again, just like the previous company, this is a hold in my opinion. Now we're going to move on to our first buying opportunity in my opinion, which is Cleveland Cliffs Inc., ticker symbol CLF. And I have this as a buy rating because not only does it have a low PE ratio, making it a good value company, but I also think this is a good growth company, and we will talk more about that later in the video. The current stock price trades for $16.48, while investors think that the company should be worth anywhere between $16 and $39 over the next year. Cleveland Cliffs is very similar to the United States Steel Corporation Company that we talked about earlier because they are a major steel producer. However, this company also supplies iron ore pellets, and they are mainly specialized in stainless steel tubing and other products. And to me, this is a good buying opportunity for reasons that we will talk about later in this video. The next company that we're going to talk about is Azenta Inc., ticker symbol AZTA, and in my opinion, this is another good buying opportunity because the current stock price trades at $74.29, which is substantially lower than what investors think that the company should be worth, because investors think that the company should be worth between $82 and $121 over the next 12 months. This company also has a low PE ratio, and I really like what this company does because this company specializes in genomic services because they're a life sciences company, and they are very involved in drug development, which makes their customers pharmaceutical organizations, biotechnology companies, and sciences research companies in general, which to me is very good because this is going to be counted as a defensive stock, and defensive stocks are fantastic buying opportunities while the stock market is falling like it is right now. Lastly, we're going to talk about, for our best value stocks on the stock market right now, we're going to talk about eBay Inc., ticker symbol EBAY. This company currently has a stock price of $45.67 with a PE ratio of 2.7. However, investors think that this company is somewhat fairly valued right now because, according to investors, they think that the company could fall to at least $36 or it could surge as high as $90. So this is clearly going to be more risky. However, I think that the company is a good holding opportunity. If you didn't know, eBay is an e-commerce company that connects buyers and sellers across around 190 markets spread out over the entire globe. Now that we've covered our best value stocks, let's move on to our next strategy of fast growing stocks or growth companies. And these companies are ranked by the growth of both their revenue as well as their earnings per share growth quarter over quarter or year over year. So companies with generally impressive earnings per share increases or revenue growth rates that are phenomenal are going to be on this list. However, clearly I can't name them all. So the first company we're going to talk about is a company that we just mentioned, which is Cleveland Cliffs Inc., ticker symbol CLF. And again, this is a buying opportunity, but I'm not going to go into too much detail because we just went over why they are a good buying opportunity. But I like to show investors that this company not only has a fantastic growth rate in terms of their revenue growth and earnings per share growth, but they're also a good value play right now. And clearly, when we're talking about growth companies, we want their EPS growth and their revenue growth to be relatively high. So this leads us into our next buying opportunity, in my opinion, which is Ashland Global Holdings Inc., ticker symbol ASH. The current stock price trades for $103.18, but investors think that this company is currently undervalued right now, even for a growth company, because investors at minimum think that the company is worth $107, and at maximum they believe the company could reach $138 over the next year. Ashland Global Holdings is a company that makes specialty materials for their customers in markets such as the energy market, the automotive market, the construction market, and they also make food and agricultural coatings. And in my personal opinion, I really like the growth rate and the growth trajectory of this particular company, which I think makes this company a good buying opportunity. The next company we're going to talk about is Coterra Energy Inc., ticker symbol CTRA, which trades at $26.35, which again is below the low-end investor price target of $27, and clearly it's below their high-end price prediction of $47 according to investors. This particular company is another energy company like the majority of companies on this list, and they are an independent oil and gas exploration and production company. However, for me personally, I am not too impressed with this company, but we are going to see this company again when we talk about our momentum stocks. The next company on our list is a relatively well-known company that I have a hold rating for, and that is going to be Marathon Oil Corp., ticker symbol MRO, which trades for around $22 per share, which is above the low-end investor price target of $18. However, many people think it could grow to the $43 price target. So MRO basically is an oil company, which is in the name. They are an independent energy company that specializes in the exploration and production of oil and gas. And as you'll see as we go on, many of these types of companies are on this list right now. Lastly, for our fastest growing stocks, we're going to highlight CF Industries Holdings, ticker symbol CF, and it's currently priced at $83.32, which is substantially lower than what investors think that the company could be worth over the next 12 months, because their price targets range anywhere from $93 all the way to $142. However, in my subjective opinion, I wouldn't add this to my portfolio right now, and I just have a hold rating. However, for all of these stocks, we don't have a sell rating, which is absolutely phenomenal. Finally, we're going to arrive at our momentum stocks, and a momentum strategy basically allows investors to identify a fast-growing company or stock to where they want to get into the stock, ride the wave of momentum up, and then sell at the top. So this is more for traders, and clearly we want their 12-month returns and their momentum to be as high as possible, because these are the type of innovative stocks that are rapidly growing in the current stock market environment. However, I don't really like momentum investing because it's too closely related to trading, in my opinion. And I think many people think they know how to trade stocks, but they're really just gambling on whether or not the stock is going to go up or down, which is why I always like to point investors to the MTUM ETF, which automatically invests you into the top momentum stocks, and it rebalances itself. So you don't really have to actively trade your stocks. This ETF does it for you, and I've had a great experience using this particular ETF, and this ETF is in my personal portfolio. So what are some of the stocks that we're going to talk about today? Well, the first one is going to be Dividend Energy Corp, ticker symbol DVN, which has a stock price of $53.77, which is amazing because this means that the current stock price is below what investors think the company is actually worth, because investors think that the company's worth somewhere between $57 and $103 per share. Dividend Energy, just like the majority of other companies on this list, is an energy company that engages in the exploration, development, and production of oil, natural gas, and natural gas liquids. So overall, this is a pretty solid company, but I don't have a buy rating on it, I just have a hold rating. However, that doesn't mean these companies are going to be good for you, because you have different investing goals, different risk tolerance, and a different strategy than what I am utilizing. So always make sure to do your own research on these companies. The next company we're going to talk about is Occidental Petroleum Corp, ticker symbol OXY, which trades at $57.52 per share. Also, the current stock prices for all of the companies mentioned on this list are very volatile right now because the stock market is falling, so the current price clearly is going to be different when you look these companies up. However, investors think that the company is worth somewhere between $52 per share and $110 per share. Just like many of the other companies on this list, Occidental Petroleum Corporation is an energy company that is involved in the production and exploration of oils, natural gases, and liquids. The next company we're going to talk about is Continental Resources Inc., ticker symbol CLR, with a current stock price of $65.22, which is in line with the low-end investor price target of $64, but this company could grow to a price prediction of $95 according to investors over the next 12 months. This company is clearly a resources company that specializes in oil and gas exploration and production, just like the majority of other companies on this list, because these are the types of companies that are surging right now given the current stock market environment and the current economic environment with rising gas prices. We also have a company that we just talked about earlier in our fast-growing stocks, which is Coterra Energy, ticker symbol CTRA, but we already went over that stock, and like I said before, it is a hold rating in my personal opinion, but if you are a growth and momentum investor, maybe this company is really good for you. Lastly, we're going to talk about McKesson Corp, ticker symbol MCK, and to me, this is a buying opportunity, even though the current stock price trades for $321.55, and investors think that the company is worth somewhere between $320 and $395, I think this is a phenomenal defensive stock to buy right now. McKesson, if you didn't know, is a global healthcare company that provides products and services to a wide range of customers, which would include pharmacies, specialty practices, surgery centers, and various physician offices. This company also has major healthcare provider companies as customers and various nursing homes, and because this is a defensive stock, considering the current stock market environment and it has good momentum, I have this company as a buy rating in my personal opinion. But I would love to hear your thoughts down below about any of these companies. Remember to go and smash that like button. For more videos like this one, subscribe if you are new, and I will see you in the next YT video.